watching CNBC-TV18.
18,594, almost back at new highs.
Record highs yet again, right? On the Nifty and the Sensex on the Nifty back.
7-8 minutes back, the market was at the day's high, which is not the case anymore. The high, we're about 40 points off the day's high now. So 18,605 is where we leave off. In terms of the Bank Nifty, it actually was worse off than the Nifty, barely ending in the green. Mid caps and small caps down 0.5% and 0.75%.
Hello and welcome to CNBC TV 18. You're watching Markets Today, the show where we track the 6 hours of the day's trading action in 5 key headlines. I'm Reema Tendulkar and these are the headlines for the day. Indian indices slip from intraday highs as profit booking wipes out some gains in late trade, but they still managed to post record close. Mid-caps underperformed the benchmark with the index closing in the red. HUL, Britannia, Nestle all bat for the bulls. Tyre makers Apollo Tyres, JK Tyres, CEAT hit fresh 52-week highs after rubber prices hit a low. CEAT tells CNBC TV18 margins will improve in the coming quarters. Hopes of China easing back on its COVID policy helps push crude prices higher. The sentiment also gives metal prices a fillip. NDTV's promoter entity issues 99.5% of its equity to Adani Group. The transfer of shares will give Adani Group control over a 29.2% stake in the broadcaster. NDTV stock closes with gains of 5%. Gland Pharma zooms 7% after reports of Fosun Pharma considering a sale of the Indian drug maker. Lupin gains 2% after its Brazilian arm buys 9 drugs. On the other hand, Laurus Labs slides 8% lower after Kotak Institutional Equity downgrades the stock to a sell. And here's the lineup of what we have for you in store today. It's a power-packed show in Market Opinion. We've got Chaitanya Kahandari, Head of Macro Research for Emerging Markets, Morgan Stanley, Rahul Arora, CEO of Nirmal Bang Institutional Equities, and in Big Corporate Voices, we have Kumar Subbiah, CFO of CEAT, speak about the falling raw material prices and the favorable impact it will have on margins. But first up, let's talk market. The bulls were in control of the Lal Street. The Sensex and the Nifty hit record highs for another day, but profit booking wiped off its intraday gains. By the end of trade, the indices did manage to close with some gains and at a record close. Prashant is here with a wrap of the day's trading action. Prashant?
The market ending higher once again, and it was a session similar to yesterday. We made a new high and then the market pulled back in the last 40 minutes or so of trade and ended with about a 40-point gain. Banks, they were actually pretty flat, the Bank Nifty itself, and broader markets, mid-caps and small caps, were down 0.5% and 0.75% each. I'll get to stocks in a bit, but more in terms of sectors, FMCG perhaps is the only standout sector which did well, led by lever. Metals and consumer are two other areas which saw relative gainers. The government pack, CPSE pack, was under pressure, and real estate as a pack pulled back as well. As I said, lever was a big reason why the market still had some gains on it. JSW Steel was higher. You had Hero and Britannia, which were some of the other names, which ended in the green. Market breadth, the difference between gainers and losers kept narrowing through the course of the day, and by close, actually, it had flipped. More losers as compared to gainers. In any case, broader market gainers in the form of Dabur, Bandhan Bank, Gland Pharma, AB Capital, Delivery, New India Assurance, which has, of course, been a huge underperformer since listing, and there were names like Green Panel, which did well, and broader losses coming through in names like Laurus Laboratories. There was a downgrade. All Cargo was down some 7%, and IIFL was lower as well. There are signs that the market is getting a little tired. After making new highs, what you want to see is the market gaining, a couple of 100 points quickly and not dithering, which is what the last two sessions are indicating the market is doing. And of course, broader markets pulling back today after 2 days of outperformance, I think also needs to be watched. US session will be important. We had a sharply down day yesterday. US markets will also be eyeing what Fed Chair Powell will say on Wednesday. So that is something which I think will be important to track this week.
Prashant, thank you very much for that. Get you some expert opinion now. Rahul Arora, CEO of Nirmal Bang Institutional Equities, say 2023 is going to be a challenging year for the markets. He added that cement, banks and defense stocks could be good bets as we enter a pre-election year.
It's very difficult to justify stocks on a one-year forward. Confessed as a sell side,
entity. So we've had to roll over valuations just to keep stocks as buys. And that should tell you if the street is doing that. You know, a lot of people are now valuing companies on September 24, which is the midpoint of 24, 25, or they rolled over to 25, which means from a 1 year forward at these prices, you're finding it very difficult to justify valuation. I don't think there's going to be too much price-wise damage. You know, even if you fall a couple of thousand points from here, the kind of monies that have been made in the run from 7.5 to 18.5 is been amazing. But I would say more a range-bound time-wise correction rather than a significant price correction would be my guess. I would avoid anything export related and go overweight on anything domestic related. I think the time to buy IT services will come. They're fantastic businesses, great cash flows, great dividend yields on them. But my sense is that they haven't called out the slowdown in the greater part of their businesses. The fact that we're heading into an pre-election year, I think cement, banks, the Prime Minister has spoken a lot about defense. That could be an interesting play. And maybe as a second or third order beneficiary, maybe something like an FMCG could make a comeback, which has seen both time-wise, price-wise correction and a technical factor. It's relatively under-owned. Nobody's over-owned on the consumer staples at this point.
Meanwhile, Rana Gupta, Senior Portfolio Manager and India Equity Specialist at Manulife Investment Management, said that he's positive on industrials and large-cap banks.
Industrials, particularly in the areas of auto ancillary, in chemicals, in capital goods area, we are quite positive. We like the large cap banks also, because I think the credit growth is quite strong, cost picture is quite good, credit cost is not a concern at all. So I think the large banks will continue to deliver very good numbers. So banks and industrials, at the margin, we would be a bit more cautious on, let's say, something like, when I say consumer, it's not all consumer companies, but there are many consumer companies who have the very volatile input prices. So I think the margin scenario there, we would be a little careful.
Let's get to the second headline now. Tyre makers Apollo Tyres, JK Tyre, CEAT all hit fresh 52-week highs after rubber prices hit a 2-year low. We caught up with Kumar Subbiah, CFO of CEAT, and he says margins will improve going forward.
Earlier projection of raw material prices going down by 2.5% to 3% in Q3 versus Q2. Okay, so therefore, I don't think there is any big change vis-a-vis our earlier assumptions. As far as rubber prices go, in the international as well as local prices, there has been gradual decline in the prices since September. The local prices are in the range of about 148 to 150 rupees per kg ex Kerala, and international prices on CAF basis in the range of about $1,350 or so. So there has been a correction of about 10-15 rupees per kg in the last 2 months, both international as well as local. As far as the current quarter is concerned, as the raw material prices are likely to go down to the extent of 2.5% to 3%, to that extent, there will be some favorable impact on margins. The first 6 months of the current year, we spent half of the 900 crores, about 450 crores. And from here on till end of the year, okay, we expect our debt level to move up in the range of about 300 crores approximately. We would certainly be seeing double-digit kind of a growth versus the same quarter of last year. Okay, however, Q3 volumes could be in line with Q2 or could be marginally lower than Q2. So quarter on quarter, you would see that kind of a trend.
Let's get to the third headline then. Hopes of China easing back on its COVID policy help push crude prices higher. The sentiment also provided a fillip to metal prices. Manisha is here with a wrap of the commodity market action.
It's been a good day for the industrial commodities, especially energy and metals as a basket, where the crude oil prices came off the 11-month lows that they were trading in the markets with yesterday. This is after China says that they do have no intention of rolling back on all the COVID restrictions that they eased, even as the COVID cases in the country have been surging. And then, of course, there have been some protests as well on various Chinese cities. So the fact being that you could be looking at more positive steps coming in from China was supportive for the industrial metals there. Apart from from that, China also has been giving out stimulus when it comes to infrastructure and real estate as a sector. That has been supportive as well. So metal prices gained between 1 to 3% in the day-to-day. Also the fact that you have seen inventories continue to decline. The US dollar was slightly on the weaker side as well. That was supportive. For the crude prices, apart from all of this, it also is going to be about the OPEC meeting on 4th of December, with the markets expecting that OPEC will further cut output in the meeting. They already are producing 3 million barrels less than the agreed quota. And for the month of November, they have talked about officially cutting output by 2 million barrels. So what they say, what they do as in sense of action is something that the markets also will keep an eye on.
Manisha, thank you very much for that. The OPEC Plus meeting is scheduled on the 4th of December. But the biggest risk for India is oil prices. That's the word coming in from Morgan Stanley's Jitanya Kandhari. In an interview with our channel, she says she's confident that oil prices will not rise above $90 per barrel.
Biggest risk, if I had to highlight in India's case, is clearly, the oil and the translation that has on its fiscal account, on its current account, etc. So I don't feel very. I'm pretty confident that oil prices won't go up above $80-90. You could have a rally when China comes back, if and when China comes back, and the restrictions are lifted. There would be the demand element that adds to crude prices. But I think at several points at 95 and up, I see supply side response coming in for the oil complex, and I don't really see oil prices rallying from there very significantly.
Get into a break now. On the other side, we'll be back in a jiffy with the other headlines.